With infections reducing significantly and state governments moving towards completely removing COVID-19 restrictions, we expect strong improvement in demand almost after 2 years of disruption. Lemon Tree Hotels is scaling up its business and targeting a room count of about 25,000 in the long run from the current level of about 9,000. Lemon Tree would be expanding with an asset-light approach without much strain on the balance sheet. It has permanently reduced the cost structure, which led to margin improvement in Q3 FY22 compared to pre-COVID levels. Also, demand-supply dynamics in the hotel industry are expected to remain favourable over the next 2-3 years, benefiting larger branded players like Lemon Tree. Demand is expected to emerge strongly post-COVID-19 owing to resumption of travel and pent-up factor. However, supply is expected to be muted as fewer smaller players have shut operations and many of these smaller guys await demand normalization before adding any new capacity. Therefore, we expect Lemon Tree to emerge stronger post-COVID-19. In fact, it's among the quality companies in the hotel industry and one of the best stocks to play the hotel sector upcycle. The trend of revenue recovery accelerated in December quarter, with revenues reaching about 72% of pre-COVID levels, which is Q3 of FY20. Revenues more than doubled YOY. Lemon Tree witnessed robust demand in festivities, weddings, long stays as well as staycations. It also saw a pickup in business-related travel as well as conferences. Occupancy improved from 51% in Q2 FY22 to 58% in Q3 FY22. Average daily rate rose about 30% on a sequential basis to reach 3,900 in Q3 FY22. Operating margins improved and were about 340 basis points above the pre-COVID quarter of Q3 FY20. This is despite revenues being about 30% lower than pre-COVID levels. Sharp cost control measures in areas of employee expenses, power and fuel, as well as adoption of digital technology led to better margins. Lemon Tree almost reached break-even at the PAT level. Third wave of COVID-19 and the resultant restrictions affected Lemon Tree's revenue in Jan 22. It witnessed a drop in the bookings and increased cancellations to the tune of 40 to 45% in Jan 22 compared to December 21. However, COVID-19 infections have reduced drastically and various state governments are easing restrictions as we speak. In fact, Lemon Tree witnessed rapid recovery in early part of Feb 22 with occupancies reaching 2,000 rooms per day versus 1,650 to 1,700 rooms in Jan 22 and 3,000 rooms in entire Q3 FY22. It expects further improvement in occupancy and a much faster recovery from the third wave compared to earlier waves of COVID. Lemon Tree hopes to reach pre-COVID levels by first half of FY23. It has worked on cost control initiatives during the times of COVID. It has reduced the PBT break-even by about 15%, resulting in margin improvement once the revenues rebound. With further improvement in revenue as COVID-19 recedes and business reaches normalcy, we expect margin improvement to sustain. Lemon Tree has a strong expansion pipeline and aims to open 20 new hotels which would provide additional 2,006 rooms. It plans to follow the asset-light strategy for growth. Of the expansion plan, about 1,268 rooms, which is about 65%, would be on managed or franchised basis, wherein Lemon Tree will not own the hotel but manage it under its brand. Asset-light strategy would provide growth without straining the company's balance sheet. Lemon Tree is currently present in 54 cities and aims to expand presence to 67 cities over the next 2 years. In fact, in the next 5 years, it aims to reach top 150 cities of the country. At the current market price, if you look at the valuations, the stock is trading at 16.4 times FY23 EV to EBITDA projections. The stock is about 27% below pre-COVID levels and hence looks fairly attractive.